Breakouts are one of the simplest and most powerful ways to trade the market. But here's the truth. Most traders lose money using a breakout strategies not because breakouts don't work, but because they don't know how to filter fake breakouts from the real ones. Hi traders, I am Divakar. Today's video is special because I'm finally revealing one of my personal favorite trading setups, a breakout strategy that I've been using and refining for years and that still performs reliably across markets, stocks, indices, and even crypto. Now, listen, breakout strategies are often misunderstood. Beginners think that the moment a candle crosses a resistance, they must jump into the trade. And then what happens? A boom, a false breakout, or stop loss getting hit, finally account crying, right? We all been there. I've been there. So today I'll walk you through step by step how to identify a high probability breakout, how to avoid traps, how to enter, where to place stop loss, where to exit, how to turn a small edge into consistent profits. By the end of this video, you will walk away with one complete plug and play strategy that you can start practicing from tomorrow. By the way, if you want finally learn trading the right way without confusion, subscribe now. I teach the stock market in a way no one else doing right now. What is breakout? Before we move to the actual setup, let's quickly align on what breakout actually means. A breakout is simply a situation where price escapes a zone, either a resistance zone like breaking up or a support zone breaking down. Think of price like a pressure cooker. Every time buyers and sellers fight, the pressure builds. The more attempts the price makes to break a level, the more powerful the eventual breakout becomes. But not every breakout is reliable. Most breakouts happen because retail traders jump in early and institutions use that jump to trap them. Then they reverse the price. So our job is to not just to spot any breakout, but spot a breakout with institutional confirmation. Well, breakout is not equals to buy immediately kind of a thing, which I want to say here. And now let's break down the exact framework I use. Write this down, screenshot it, save it, and this is the backbone of the strategy. I call it BREAK framework, break framework. Letter meaning B equals build up near level, R equals retest required, E equals entry after confirmation, and A equals ATR based stop loss. K equals know your exit. So let's unpack one by one here. B equals build up. Price must move toward the level slowly with the small candles, not aggressively. Small candles means no panic, no emotional value, and just silent accumulation. If the candles touching the resistance are long and aggressive, avoid. Large candles definitely equals trap potential. Well, R equals retest. I never enter on the breakout candle. I wait for a retest. Why? Because institutions love confirming that retail traders are out of the way. So when price breaks the level, I wait for a pullback and then touch the near previous resistance, and then support formation will be there. Only then I consider entering. E equals entry after confirmation candle. My entry is always based on the candle after the retest. Not guesswork, not hope, not FOMO. If after retesting a bullish engulfing hammer, or a strong body candle forms, that's my green signal. So you can see the bullish engulfing and the hammer kind of a formation there, a strong body with volume. Well, now A equals ATR stop loss. I use ATR into 1.5 or 2 times for stop loss. Why? Because breakouts can shake and a fixed stop loss sometimes gets hunted. K equals know your exit. I exit using a simple system at 1:2 risk reward, take partials, move stop loss to cost, trail using either 20 EMA or swing lows. This allows me to catch huge moves without fear. Well, here's the example of a typical breakout from the HDFC Bank. And you can see here on the Monday, 6th February 2023, you can see multiple times it has tested here and come back. And finally, it's level. Once it broke out this level, you can see there is a retest here and then a fantastic upward move. So you can see one is a couple of times testing at the resistance level and then the breakout and then the retest and then the actual breakout. Now here, supportingly, you can see the bigger green candle on the volume side also, which suggests there is a bigger institutional buying and plenty of buying happening on this level. So this is a typical breakout chart which can refer. Now, when not to trade this strategy, just as important as knowing when to trade is also knowing important when not to. Avoid breakouts when news is coming, like Fed, RBI results, etc. And also support or resistance level is fresh with only one touch. And avoid when market is choppy or range bound. Avoid when candle breaks with huge wick and low volume. It's a false signal. And then no built up is equal to no breakout trade. So let's summarize this and a quick what we did. Identifying the strong level, what we did, and wait for the build up, and then the breakout happens, and then wait it for the retest, confirmation candle, and put the ATR stop loss, and then trailing the trade with exit later. Now I'll give a homework. Here's the homework. Spend 20 minutes per day looking at charts of Nifty 50 stocks. Find 5 valid breakout examples and 5 fake breakout traps. Comment below once you complete it. I will reply for it. And if this gives you clarity, hit like, because that's how it works. And comment breakout master if you will test this strategy. Well, if you found this useful, make sure you subscribe. I upload simple, practical trading lessons every week. It will genuinely help you grow faster.